Hello children, how are you? I hope you're doing good. And you have already watched all the videos that I've posted right from the beginning of class 11. Yes, everything right from describing the basic accounting terms, to accounting equations, to classification of accounts, journal, ledger, cash book and all other subsidiaries, that is purchase book, sales book and everything. Yes. Now, if you haven't watched, then please, I have given below in the description box all the links to all those videos. Please do watch it, children, because now we are going to start with something which is a step towards preparation of final accounts. So let us quickly recapitulate our journey up till here. Journal. Yes, that is always the starting point. Whenever a transaction happens, it has to be recorded in journal. And journal is called the original book of entry, where you get all the details of the transactions as and when they are happening in the chronological order. So original books can be further divided for the purpose of ease of handling, yes, into various subsidiary books. So these are the subsidiaries of journal or subdivisions of journal: cash book, petty cash book, purchase book, purchase return book, sales return book, journal proper and bills receivable and bills payable, which we did not do because it's not there in the syllabus. Rest all of these books we have already done. Yes. Now all of these are part of journal. After making journal, we have recorded, okay, basically whatever the transactions have taken place. But to even classify it further, so that it is easier for us to understand what are the account balances, we make the next set of books, which is called the ledger. Ledger, the final book of entry or the principal book, okay, because this is the book from where we get to understand what are the individual account balances: cash account, rent account, bank account, advertisement account, purchase account, sales account, returns, everything, assets and liabilities, debtors, creditors, bills, all these things we get to know from ledger. So these are giving me balances about what types of accounts do we have: incomes, expenses, assets and liabilities. Yes, of course, capital. Capital is one of the liabilities. Yes, the internal liabilities. So all these accounts that are contained in the journal, all are coming from ledger. This is act of posting. Yes, we have done this. Bringing or copying the transactions from the journal to the ledger is called posting. So we have posted everything in the ledger. All my accounts are ready. They are balanced and closed. Okay. So balancing has been done. Now, what do? We have different types of accounts. Now, after this, we need to make the final accounts. Final accounts meaning at the end of each year, the final reports. Just like your report cards, right? Every year you get. Same thing, the business also gets a report card. Okay, this is the profit, this is the loss you make, and this is the financial position of your business. Now, what is the difference between financial position and profit and loss? Yes. Trading and profit and loss account is made taking incomes and expenditures into account. Meaning, from all the incomes, we will subtract expenses to get either profit or, of course, if expenses are more than income, then it will eventually result in a loss. This is the performance, financial performance of the business in this particular year. This year, okay? It's only 1 year. All the incomes related to this year I will take here. All the expenses related to it this year I will take here. And I will compare and find profit and loss for only this year. This is called financial performance. Yes, this year. But your financial position is shown by the balance sheet, where you have assets and liabilities shown. Assets and liabilities are not just built up in one day or one year, isn't it? It is the result of right from the way you have started the business, and that is why it is called the financial position. This is the result of all the years that the business has been, operating. Okay. So this is the difference between financial position and financial performance of year. This is of 1 year and this is at a given date. Okay. Result of all the 5 years of the business life. Okay, are you getting it? So these two are, the final, comprise the final accounts of a business, a sole proprietorship we are talking about, right? Final accounts, you're making trading and profit and loss account and the balance sheet. Of course, what are we requiring here? Assets, liabilities, income and expense. All these accounts are here. But then in the ledger, everything is there, no? All khichdi. It's not like separated like income, expenditure, assets and liabilities. So it will become very difficult to pick up from here and put it in the balance sheet and trading account individually. So what do we do is in between this, the ledger and final accounts here, we make a kind of a sheet for us, for our own calculation, and that sheet is called trial balance. Alright? It is just a list. It is no account, it is no journals, no ledger, nothing. It is just an account, it's just a list of all the ledger account balances. Okay. So what is this trial balance? It's a kind of statement, a list of all ledger account balances. Okay, on a particular date. Usually at the end of the year. So we will list out everything, all incomes, all expenses, all liabilities and assets. Now of course we will have a way to draft it and that is what we will learn in the coming chapter, okay, or coming video. Now this is just an introduction as to where am I going. Okay, the journal tha, the cash book tha, the purchase book tha. We don't know where we are going. So this picture should give you a clarity as to why and how we are going this stepwise. So it is trial balance that is made after ledger accounts are ready. Before the preparation of final accounts, we have the trial balance. So this gives us all the ledger account balances in one place. अब इसको लेंगे और final accounts बना देंगे. Makes our job a bit easier and systematic. Also, this also helps to check the accuracy of the books. And what accuracy? Only the mathematical accuracy of the business. Meaning, now see, we are following the dual aspect concept, the double entry system. All the debits have to be equal to credit. Yes or no? Assets have to be equal to liabilities. We haven't done that. And then trial balance, when we have all the list, obviously all assets and expenses will have a debit balance because we debit assets and expenses when they happen. And all incomes and liabilities will have a credit balance. So we will have two columns here, a debit column and a credit column. So income and liabilities will be in the credit column and expenses and assets will be in the debit column. Obviously they should be equal, all debits have to be equal to credit, and if at all it's not, then we will immediately get to know, okay, something somewhere we have missed. Correct? So that shows errors in the books. Therefore, trial balance is a quick arithmetical check that my accounts are matching or not. If not, we will go back and check the books. If yes, then we move ahead with the final accounts. Yahi karna hai? Is it okay? So this is your introduction. This is your stepping stone as to what we are going towards. We are going towards final accounts, but before that, we will have the checklist made, which is called the trial balance. So welcome to trial balance, children. So we'll have more of it in the next video. Keep watching the videos and then practice more of accounts. Take care. Bye-bye. Thank you for watching.